I love taking advantage of inefficiencies. And the simple fact is most people, most traders log off from their trading platforms, especially on a Friday afternoon, when it's the weekend, when people want to take it easy. But smart traders log off after they enter this high odds trade. In this video, I'm going to walk you through step by step one of my favorite strategies, the over the weekend pattern. It's about really tuning up when other people are logging off on a Friday afternoon, okay? I'm looking for Friday afternoon catalysts. I'm using that momentum to trade that stock over the weekend into Monday or sometimes even Tuesday for these high odds quick spikes, okay? I want to break this down step by step. I know it sounds too good to be true, but it's not. I'm going to draw it out. You're going to see my artwork, okay? I'm going to show you what to look for, how to trade it, and how to manage your risk. Understand, this pattern doesn't work 100% of the time, but when it does, it really works, especially for small accounts. So the goal is to win more often than you lose and your wins be bigger than your losses. That's how you become my next millionaire student. Let's go over how this over the weekend pattern works. Understand, the idea behind this strategy is simple. Late on a Friday, a stock hits some unexpected news, maybe a press release, maybe a new product, maybe the CEO tweets something big. There's many different catalysts, but it happens on a Friday afternoon. Most traders miss it. They're checked out for the weekend. But I am still scanning. Instead of tuning out, I am tuning in. I'm drinking my coffee. I'm drinking my Celsius. I'm ready on a Friday afternoon, no matter where I am in the world. In Asia, this means staying up all night on a Friday night. I still do it. Over the weekend, hype can build. Social media, chat rooms, articles. By Monday or Tuesday the next week, boom, you get a huge gap up or ideally a morning spike when the lesser prepared people react and they try to buy the stock because they can't buy it on the weekend. Remember, you're trading the anticipation, not the actual news. Leave a comment underneath this video, say buy the rumor, sell the news, or buy the hype, sell the news. You don't want to wait for when everybody else has the news, for when everybody else is acting. You want to be ahead. I'm not saying get inside information. I'm just saying be meticulous. And if you're meticulous on a Friday afternoon, you're golden. So what do you look for on a Friday afternoon, okay? The answer is in this checklist. What makes a good weekend play? Here's what I look for. Late day news, a press release, okay? For me, look, a PR, that's one good piece of news. Maybe the CEO mentions it on social media. And understand, I don't actually track the CEOs and the press releases. I'm using Stocks to Trade Breaking News. I'll post a link to that below. Every single one of you should use Stocks to Trade Breaking News every single day, especially on a Friday afternoon. Ideally, I'm looking for underfollowed stocks, stocks under $5 a share. Why? I'm sorry, my writing is bad. Because these small caps, these nano caps, these micro caps, they're very underfollowed. And ideally, they have a history of spiking because then they can respike. Former runners can run again. So I'm looking for, again, some catalyst with the right price and the volume and the price movement into the close. I want to see a stock. If this were a chart, right? Let's say the stock is trading kind of sideways during the day, and then for whatever reason, something happens with the CEO, with social media. There's a million different catalysts, but the stock spikes up. And let's say that this is, call it 3 p.m. Eastern, okay? I want that spike into the close because that tells me that traders are interested. Some traders see it. Ideally, there's a story that traders can run with, something that people get excited about when the market closes at 4 p.m. Eastern. But understand, I'm looking specifically 2:33, 3:30 p.m. Eastern. I'm not just buying any stock. Some weekends I don't have anything, but I'm looking for a stock that spikes into the close. I'm looking for hype, something that can trend on social media or, get spread a lot in trader circles over the weekend. Remember, the stock market is closed over the weekend. So I like to buy these stocks on a Friday afternoon, not later when everybody else is buying on a Monday morning. Timing is everything. This is human nature. Again, most people understand the end of the work week, especially like lazier people who make like these middle class salaries. They're done. Money is not everything. Work-life balance is everything. All that kind of hogwash, right? They're done at 4 or 5 p.m. Eastern on a Friday. They can't wait for the weekend. but they're mentally checking out 1, 2, 3 p.m. So I'm looking for this very specifically, not at noon or 11 a.m. or 10 a.m. Eastern. I want that maximum inefficiency. I want the move to have already started. This is very important. This looks like just like nothing. It's like scribbling on a piece of paper, but I want some traders to have already seen it, because there's a lot of news out there. If the stock doesn't react at all, then it might be, a non-event. Best setup is when I catch a little runner like this before the hype begins. So I want to take advantage of this, just human inefficiency, the timing inefficiency, the gap between when the news drops and when it spreads and when the crowd can react. This is your edge. Remember that. And understand, this is one of my most reliable patterns. I've been using it for 20 plus years. So understand, this is one of my most reliable patterns, but I have several patterns. And if you actually click the link below, I made another video on some of my other reliable patterns. If you want to make millions, if you want to be my next millionaire student, you learn pattern by pattern by pattern. Everyone does a little differently. Everyone has a different personality, different strengths and weaknesses, but learn from my predictable patterns. I've taken thousands of different strategies and compressed them into the best high odds patterns for you. So click the link below and learn. Understand, this is the setup, but I'm not just holding any stock for days, weeks, months. This is a short-term strategy. If we're going to take a look at the chart, okay, this is Friday. And remember, I'm looking to buy into this little spike. Friday, right? I want it to close strong. Ideally, on Monday, the stock gaps up even more or spikes up even more, because again, over the weekend, this stock has ideally spread with the news. Other traders are excited. So I'm buying somewhere here on that first green spike, and then I'm ideally selling higher into a further spike. Often what happens is you get this Friday spike, a little bit of, anticipation buying. You get more idiots buying on Monday because they've heard about it over the weekend. And then after that initial spike on Monday morning, then it drops down because there's no more buyers. This has happened again and again. One of my favorite videos that I'm going to include a clip from is when I bought Dan Bilzerian's pump. He posted about his ticker BILZF. It wasn't over the weekend. It was actually midweek. I was actually up on stage during one of my conferences, and I bought the stock because he posted in his Instagram story the ticker to his stock. And most people who follow Dan Bilzerian or followed him when he was more popular years ago, they weren't necessarily watching his Instagram story right away. But the Instagram story, if you use Instagram, you know that it lasts 24 hours. So the market closes at 4 p.m. Eastern. When he posted around 3 p.m. Eastern, a lot of people are seeing it after the fact. So it was an overnight play. Sure enough, the stock gapped up. This is the thing, I didn't need to trade it. I wasn't looking for a trade, but we got a nice little dip off the high, a late day spike. You got a celebrity with 20 plus million followers. Most of them are not very financially aware or meticulous. So I guarantee you that they're going to see this overnight. It's very strange. I don't know. I got 9,000. If I could do it again, I probably would take 5,000 shares instead of 9,000. But frankly, I was trying different size orders just to try to see if it could go through. I'm in at roughly 132. It's 133 right now. The day high is 142. So I like buying off of the highs. It would have been nice to get in the 120s, but again, executions on this is so weird. If I'm wrong, I'll probably sell out at 120 and I'll lose, 10 cents a share. But if I'm right, it goes back to the 140s, possibly to the 150s, 160s, best case scenario. We got to see what the market makers are going to do. We got to see what his followers are going to do. But I like this late day, Instagram post.
All right, I am filming this on a Sunday night. I'm going to post this pre-market. And you don't really know how perfect of a setup is. I knew this was a quality setup. I wasn't oh my God, this is going to be amazing. I was buying it in the 130s, sold it, it closed in the 140s. My whole goal was a gap up in the 150s or 160s. I did not know it was going to gap up to 2 and then spike up to 4. So I underestimated it. And now, hindsight says, look, this was a perfect play. So I even wasn't fully prepared for how much upside this was going to have. If I knew how much it was going to go up, I would have tried to buy fucking 50,000 shares here at $1.40 and sell it, at 4. Like, you don't know exactly how high. But I do want to explain a little bit about the inner workings of this trade. So here are my trades. My first one was the best trade where I made roughly 40%, $4,000. And then I tried dip buying it after the spike, didn't do so well. And then, my gains got even smaller when I kept trying to dip buy it, and it just couldn't bounce. The biggest gain was that morning spike. The first day after Bilzerian put it in his story, that was when, the market makers just raped all of his followers who were trying to buy the stock. I'm sure a lot of them used market orders, and the market makers were just laughing to themselves as it went from, I believe, $1.90 to $3.90 in 6 minutes. And then it came down, and then, it came down pretty hard. I tried dip buying it, but it just wasn't bouncing, so I sold.
It did exactly this, exactly what I'm pointing to here, and it actually spiked quite nicely. The stock actually more than doubled, and then if you want to look at BILZF's chart ever since, it came straight back down. There was only that one opportunity, but that's all you need. You don't need good long-term stocks. All I care about is that one spike, okay? Guess what? If there is no spike, sometimes I'm wrong. Let's say that this is Friday. This is Monday. Oh, I got to write down Monday here on this one, right? Let's say the stock does what I want, starts going up on Friday. I buy the stock into the close. For whatever reason, let's say the stock opens down the next day, right? So let's say it closes on Friday right here, and I'm up a little bit. But for whatever reason, it doesn't go up on Monday. Let's say it opens here, but then starts coming down. I simply sell, okay? That's it. You can't get stubborn. You can't say, I wish, I hope, I hold, I hodl. Sometimes it's a small win, sometimes it's a small loss. I'm okay with being plus 1% or plus 5% or plus 10%. Whatever, any of those works. But if the stock doesn't gap up, I'm okay with being negative 1% or negative 5% or negative 10%, worst case, okay? But the cool thing is, you might say, well, Tim, this is a coin toss, plus or minus 1, plus or minus 5, plus or minus 10. But the beautiful thing is, because weekend hype can really keep going, it's not limited to just 10% of upside. I've had wins of 20%. I've had wins of 40%. I've had wins of 60%. Just a few weeks ago, I had a 60% winner on BYND. I bought it just over 60 cents. I sold it at $1, 60%, like that. Over the next 2 trading days, the stock actually went from $1 to nearly $9 a share. So you can say I sold too soon, but I still made 60%. The whole key here is that you can still profit more than you lose. So if you're winning any of these amounts, fantastic. If you're losing any of these amounts, welcome to reality. But if you win more often than you lose, and I've been winning roughly 70% of the time, past performance is not indicative of future returns, but if you win more than you lose percentage-wise, and you win more than you lose dollar-wise, your account will grow. This strategy is not guaranteed. Nothing is 100%. You have to understand that. Accept the odds, don't get stubborn. You need risk management. Nothing is guaranteed. Nothing in life, nothing in trading. But here's how I manage risk. I take small size, especially if it's speculative. You don't just have to buy the same size every time, okay? You can take small size. You can buy 100 shares. As I'm filming this, for the month, I'm actually paper trading. I've gone back to the basics, trading with paper, using stocks to trade, paper trading software, no real money involved while I'm learning. That's okay too. Also, have clear profit targets and tight stops in case you're wrong. Understand, I also don't want to average down. I don't want to get stubborn. You don't want to let a small mistake turn into a big disaster. If it doesn't spike, for whatever reason, if it doesn't take off on social media, I simply cut losses quickly. You don't have to be perfect in this game, okay? You just have to be disciplined. You can't risk big losses. I'm okay with losing 1, 5, 10%. I'm not okay with getting stubborn and losing 50%. That can happen if you get stubborn, especially if you take big size and you keep averaging down, because you want to be right all the time. Take what you can when you can. Okay, this is the weekend pattern. It's a smart, strategic way to trade when most people aren't watching and you're taking advantage of human nature. I've been trading and capitalizing on this pattern since I was in college. My first $100,000 day was on this pattern. If you read my book, An American Hedge Fund, I'll post the link below. You can read it for free. You can read about that first $100,000 day when I was a college freshman. It changed my whole idea about the stock market and life and money. Also, check out this video I did detailing my first $100,000 day as a college freshman. It's in the book, yes, but I also want you to watch this video because I go detailed into the chart so you can see this pattern literally working 20 plus years ago. It's pretty crazy. I actually saved the chart of ISO, which actually turned into ISO, but this is exactly what we're looking at here in early 2000, okay? So the stock is already up quite a bit. This is a daily chart, and you can see every single day it's grinding up. And then in 1 week, this was the crazy week. Again, the NASDAQ is surging, the entire market is surging, but this stock basically goes from 5 to 17. And you can see here the gap in the chart. This is exactly what I like to do, buying a stock on a Friday, selling it on a Monday. Now, this is an extreme example and in an extreme market. So I'm investing aggressively because it's worked for me. That's how I had made $250,000 roughly up until that point. And I just bet aggressively. I would not bet this aggressively right now in this current market and, just knowing what I know now. But 20 plus years ago, I was a newbie and I didn't know any better. I was also like blissfully ignorant and in the right place at the right time. But this is exactly what the stock did. And you can see that it gapped up here and it did hit nearly $40 a share the next day on Tuesday before eventually crashing back down to earth. If you look at my trades, this was one of the trades, and I got my trades audited back in 2000 because nobody believed that I had taken the 12,000 and turned it into nearly $2 million. So this was one of the trades where I made a little under 50,000. This was the other trade that I made a little over 50,000. There were a few smaller trades, but it all added up to over $100,000 plus. And I want you to see more examples. So this was just a few weeks ago where I actually made over 100% on my over the weekend trade. It is very, very rare that I make such a big percentage gain, but in this case, I did. And the stock actually kept going. It nearly tripled after my sell. So I want you to see these charts. I want you to see the tremendous upside. Even if the company and the stock does nothing after the fact, it's all about this over the weekend trade. So check out this little clip. I did a review of this trade. Friday afternoon. So they did a deal, new 52-week low, and they did a deal with DirecTV. And if you read the press release, which I highlighted, the deal with DirecTV was just, pure revenue upside, little to no cost. So it's very good for a near bankrupt company. The stock basically spiked from like 60 cents to 2, came down to $1, back to 2-ish. And I was buying it here into the close around 150. And my whole goal was that it could retouch 2. I didn't know if it would break 2. I just thought that it might get back to 2. It did get a little higher. It got to like the 180s. But at the same time, I was looking for more. I was trying to hold over the weekend. After I was actually down to the 130s, 140s. I think it even got down to like 125 or something. And some people were like, come on, Tim, cut losses. I wanted to give it time. Okay. Did I know that it was going to go to 7.5? No. I thought that this was best case scenario. I actually almost sold some a little in here in the 170s. I was thinking about selling half, but then I was like, no, people don't like 4 a.m. alerts. And, it is uptrending. It broke this resistance at like 150-ish. Let me give it time. And then this was literally Monday morning for you guys, like 4 a.m. For me here in Italy, it was like 10 a.m. But in 3 minutes, it goes from $1.70 to 3. And I was selling all in here in the 330s because I was just, so happy. I haven't had 100% winner in I don't know how long. 3 minutes. Okay. This is what I want you to understand. If you try to position yourself with these stocks that can spike big ahead of time, and then you sell into the madness, I don't regret it at all, okay? Because again, this is 3 minutes where it goes from the 4s to the 7s too. So you're trying to position yourself ahead of these 3 minute crazy candles. This is not about luck. This is about understanding how the market reacts to hype, news, and timing, and how to position yourself before the crowd. So understand this is why I teach. This is why you can succeed. Please leave a comment. Let me know if you've seen patterns like this, if you're ready to capitalize. Like I said, you can click some links below. You can learn more about different patterns. I also have a very long and detailed explanation. This was, just a short explanation. I have a much longer video below with a free training going over this specific pattern. If you want to learn more, if you click the link below, I encourage you to click around. You gotta study. You gotta be meticulous. The more you study, the better you'll do. This is the generation where nerds win. So get some glasses, drink some extra coffee, sleep less, study more. I'll see you in the next video.